All right, bear with me because I know these things can get complex, but I'm going to try to make this as digestible as possible and explain what they aren't telling you and the opportunity that you can utilize to make some really huge gains over the next year or so. First, do me a favor. If you can hit the like and subscribe, not only to stay in the loop with content going forward, but it also helps the algorithm do its thing, and it's very, very much appreciated. All right, to jump in, there is a crisis upon us that resembles, in my opinion, the 2008 housing crisis rather a lot, albeit with a slightly different dynamic. This is a topic that's been making headlines recently, and that's of the shadow banking crisis, with one of China's biggest companies, Evergrande, going under and creating some huge ripples right the way across the economy. But rather than run for the hills, like the media will probably try to convince you to do, in my opinion, this crisis will be a catalyst for a huge surge in the world of cryptocurrencies. Firstly, like most of us are probably asking, what is shadow banking? Well, to keep things incredibly simple, it's basically backstreet credit lending without all the complications and oversight that normal credit lending entails. It's a way for companies and banks to streamline and tailor loans between themselves. And it's an industry with over $50 trillion in it and over half of the world's economy participating in this creative way of attaining debt. Evergrande is a massive Chinese real estate conglomerate that's defaulting on that debt currently to the tune of hundreds of billions of dollars, which putting all the banks and companies that lend it to them in very precarious situations as they know they're not going to be receiving those funds back. Everyone is, of course, now worried about the potential of a domino effect from the Chinese huge economy to the rest of the world, the US in particular. So, China's shadow banking sector alone is worth over $3 trillion, right? And it's based heavily on real estate, but with some of their biggest developers in heavy default currently. So Evergrande could only be the start of this. Even as we speak, there's an even bigger entity called Country Garden that could also be directly following suit and putting them in an even more precarious situation. This is a huge reason why the US stock market has just seen some recent developments, recently losing another 2% last week, and also why Bitcoin went down dramatically. Investors are becoming fearful. They're becoming fearful of China's economy struggles and how that's going to affect the US and how that's going to affect the rest of the world. But right now, people are also fearful because the Fed are making noises that they're going to raise interest rates in September or beyond due to all the shenanigans that have been going on in and around the inflation stuff. To top it all off, if that wasn't quite enough, we're also on the precipice of potentially seeing a downgrading of the creditworthiness of some of our best banks. Dozens of banks here, including banks like JP Morgan Chase, could be downgraded, therefore showing the world that they are essentially a less safe place to park their funds than they were yesterday, which ultimately is going to have a detrimental effect on who's putting their money where. I explain all this to set some context. As this crisis deepens, it's sending shockwaves throughout the traditional financial markets. The uncertainty is leading to increased volatility, and investors are and will be more so searching for safer havens. So, already, if we're paying attention, we're seeing some macro indicators that could potentially plot an investment blueprint for us to follow over the next year or two. This is because when traditional markets stumble, cryptocurrencies shine. Why? Cryptocurrencies offer a decentralized, borderless option that's not directly tied to government or central policies. As confidence in traditional systems waver, crypto starts to look a lot more tasty. Past instances of market turbulence have shown that investors seeking shelter often turn to crypto. This flight to digital assets can lead to a huge increase in demand and hugely drive up prices. But this is where things really get turned up a notch. Looking ahead, you really don't have to be Einstein to predict what is likely to happen. With all the turbulent time ahead in the traditional markets, the Fed is going to need to act. Now, the Federal Reserve is the United States central banking system. One of the tools, or the biggest tools of influence they have for the economy, is in adjusting interest rates. They typically lower rates when we undergo situations like recessions or times of economic hardship. When the Fed lowers rates, it's like an injection of adrenaline into the financial bloodstream, causes a lot of excitement, causes a lot of activity. Here's where the crypto connection really comes alive. When the Fed lowers rates, traditional investment options like bonds and savings accounts become less attractive. Investors start searching for higher returns elsewhere. And guess where the best place to search elsewhere is at present? You guessed it, it's crypto. So imagine this: you're an investor seeking big returns. Traditional markets are offering crappy yields due to lower interest rates. The real estate market is looking dicey and needs a few years to settle to a more appealing level. But cryptos, with the volatility, the potential for explosive price action, become a very tasty option. This shift in attention results in an increased demand. And then what happens? The law of supply and demand comes into play, right? As more investors flock to cryptocurrency seeking higher returns, the demand skyrockets. And guess what happens when demand skyrockets? Prices shoot up to the freaking moon. It's like fueling a rocket ship. In the past, we've witnessed instances where the Fed's rate cuts corresponded with significant crypto price rallies. It's not just a theory. This is a pattern that we can't afford to ignore. And coupled with the typical crypto cycle, it's a recipe to absolutely dominate for anyone playing this system correctly. So, what should we be doing? Well, while in a down market, common sense dictates that accumulating crypto during this phase surely makes the most sense, right? You have a better chance of huge returns when you're buying at much lower prices. But what crypto should we be looking to accumulate? This comes down, honestly, to personal risk tolerance. It's widely known that due to the rule of diminished returns, some of the blue chip cryptocurrencies like Bitcoin, for instance, while pretty safe and likely to outshine and provide more upside than the traditional options, are likely to fall way below the potential hundreds of X's that could potentially be in play in the altcoin market for some of those front running tokens and projects. Of course, right? I mean, because Bitcoin takes such larger amounts of economic energy to move prices, altcoin prices can move dramatically in the early days, especially with much smaller revenue injections. Perhaps moving to the altcoin market makes the most sense for many who are looking to create wealth and not just keep it like a lot of the financial institutions are, who are likely to enter the market with the Bitcoins of the world. Budding new ecosystems, such as the Pulse Chain ecosystem, for instance, look extremely tasty to me right now, especially given the low entry point at present, and also looking at past performances of Hex that's in the Pulse Chain ecosystem, where it literally achieved thousands of X's in the last cycle, means that it has precedent to do similar things this cycle. Perhaps tokens such as Chainlink, with its logistical kind of pain point solving and wide array of partnerships, is more appealing to you. Maybe even you want to stay kind of safe and stay in that safe zone, take a position in Ethereum, knowing that it's probably likely to have a double or a triple in price over the next cycle. Or perhaps it's a buffet of all the above. My point is, what you aren't being told right now, and likely what you won't until the market is at all-time highs and the entities and the larger investors are looking to use you as exit liquidity, is that right now, certainly through the lens that I'm looking at, all roads lead to a period of low pricing, followed by a bull cycle where prices will be driven up by all these macro events going on. And while some of you may still be skeptical about the crypto world because you've been scared off due to the abundance of scams that have migrated to the space over the years, the world is evolving and crypto is an inevitable future. Doing due diligence now so you make the right moves is critical and something that you're going to thank yourself for in years to come. Setting positions and setting your portfolio up while prices are currently extremely low will create a situation when the market starts to pick back up where you can stare at your portfolio and watch it gain $2,000, $5,000, even $10,000 a day in value while you sit back and enjoy the smart decisions that you made now